The October data is out for Orlando, Florida's real estate market, and I'd like to share with you what's going on currently and what that could mean for the future. Hi, I'm Savanna Williams with Team Williams, your relocation experts with Compass, Florida. Now, when I show you the first set of data, I'm going to be taking a look at the numbers pre-pandemic, so you can have a bigger picture perspective on what's happening with the market as it relates to the numbers prior to the buying frenzy that we just saw. First, I'm going to look at month supply of inventory, which is the number of months it would take for the current inventory of homes on the market to sell given the current rate of sales. A downward trend indicates acceleration of the market, and an upward trend indicates deceleration of the market. What I've got here is the month supply of inventory from January 2019 through September 22. And as you can see, inventory has been moving much less quickly in recent months than earlier this year as more homes are coming into the market than being purchased. I'm curious to see if this expanding of the market is going to continue upwards in the coming months. I think it's possible that the rate of sales would continue on this path of deceleration, especially as we head into the month of December and the holidays. However, interest rates did lower from a month ago, about 0.5 percentage point for 30-year fixed loans, which could cause sales to accelerate somewhat and cause a downwards movement of inventory. Overall, with this slowdown, we are moving toward a buyer's market and back to the level it was prior to the pandemic. Also, with that 0.5 percentage decrease, buyers have a little more buying power than they did a month ago. And if you stick around, you'll hear my recommendation for buyers and sellers in this current market. Now I'm going to be looking at closed sales. I have pulled up numbers from January 2020 to this most recent month, October of this year. As expected, closed sales were in an upward trend from January 2020 and peaked in June 21. And since June 21, closed sales have been slowing down. We can see that closed sales are going back to similar levels they were prior to the pandemic. Note that the number of closed sales is at 200 in October. This is info that we're going to keep in mind as we look at the next graph. Here I've got new pending sales, which is a way to look ahead at what closed sales will be 1 to 2 months from now. New pending sales have been slowing down since about May of 2021, which means that buyers have become less and less active since that time. Therefore, this indicates a softening in the market, and it also means that buyers in the market now do not have to be as competitive as the buyers last year or in the early months of this year. We see here in October, new pending sales is at a little under 150, which means we can expect that closed sales will follow suit and continue to decrease in the next 1 to 2 months. Now, in this graph, I've taken the same data of new pending sales and I added a data line for new listings. So the blue line indicates new listings and the green line is new pending sales. When new listings is higher than new pending sales, that means there is a softening of demand in the market, and that also means active inventory will likely increase or stabilize. It's interesting to see here that new listings have declined at a much faster rate than new pending sales, which can mean that new listings might outpace new pending sales and there could be a tightening in the market in the next few months. Next, we're going to compare active inventory with new listings. So now new listings is the green line and active inventory is the blue line. When we compare new listings with active inventory, we can get a really good idea of where the market is at and where it's heading. We see here that active inventory has increased since February of this year and is now on a slight downward trend since July, though it is not decreasing nearly as fast as it was increasing. Since July of this year, active inventory has been higher than new listings, which is something that we have not seen since December of 2020. I believe this is partly due to the slowdown of the market that happens around this time of year with the holidays and people not wanting to focus on making big life choices as much. But this is also due to the stabilization of the market overall. My prediction is that because we are seeing decreasing new listings, active inventory will decline in the next few months, but this could put upward pressure on prices, and we might actually start to see increasing prices in the spring or possibly sooner, which is the spring is usually the time of year that we see increasing activity anyway. Last but not least, I want to show you guys the average sales price since January of 2019. This is so interesting because, as you can see, the prices of homes have overall increased in the last few years. Though we saw a slight downward trend in the summer months of this year, we are now seeing since about July that prices are ticking upward through September. So for those of you waiting to buy, you can see that it's all about how long you stay in the market rather than trying to time the market perfectly. Over the short run, we see small price decreases, but these can be difficult to time because they are so short-lived. And overall, it's going to be trending upward anyway. In summary, I actually think this is a great time for buyers to get themselves in the market because of these trends. This is actually true for sellers as well. If buyers and sellers get into the market now, there will likely be less competition for both than there will be in the spring due to these trending numbers. That is all I have for you today. Each month, I'm going to share with you new market updates as new data is released. So be sure to subscribe so you can be in the loop about what's happening in the Orlando real estate market. I'm Savanna with Team Williams, and thanks for watching.